Hello everyone, in this video we are going to learn how to estimate the working capital. First of all, we have this example, so let's read it. Prepare an estimate of working capital requirement from the following information of a trading concern. Projected annual sales is 10,000 units. Selling price is 10 per unit. Percentage of net profit in sales is 20%. Average credit period allowed to customer is 8 weeks. Also, we can call it as debtors. The debtors is classified to be current assets. Also, we have average credit period allowed by suppliers, which it is 4 weeks. We can also call it as creditors, and the creditors is classified to be current liabilities. Also, we have the average stock holding in terms of sales securement, which is 12 weeks, and the stock, it is classified to be current assets. Lastly, we have 10% allowed for contingencies. So, before we can estimate the working capital, we should be able to calculate three things: sales, profit, and cost of sales. So, how we can calculate the sales? Based on our formation, we have 10,000 unit sales, and the price of each one will be 10. So, we can multiply 10,000 units multiply 10 will be equal 100,000. So the sales will be 100,000. Second things, we are going to calculate the sales, the net profit on sales. The percentage of the profit on sales is 20%. So we should multiply 20% multiply sales, which is 100,000. So 20% multiply 100,000 will be equal to 20,000. Third things, we can calculate now the sales, the cost of sales, and the cost of sales will be equal the sales minus the profit. The sales will be 100,000 and the profit will be 20,000. So 100,000 minus 20,000 will be equal 80,000. Now we can prepare the statement of the working capital. The working capital, we should know it's equal current assets minus the current liabilities. So we will classify the information that we had into two sides, current assets and current liabilities. First of all, we have average credit period allowed by supplier and the average credit period allowed by the customer, and the average stock holding in terms of sales securement. Average credit period allowed to customer, as I said before, we can call it as debtors, and the debtors is current assets. So where I put it in the current assets. So debtors will equal 8 weeks. So I will take the cost of sales and divide it in 52. 52 is the number of the weeks in 1 year, because he gave me the information based on weeks. So I will divide on 52, which is the number of the weeks. So 80,000 divided 52 multiply 8 weeks will be equal 12,307. Second things, we have the stock, and as I said before, the stock we can consider to be current asset. So the stock, it is equal 12 weeks. So 80,000 divided 52, which is the number of the weeks in 1 year, multiply 12 will be equal 80,463. Now we can get the total current assets will be equal 30,717. So the average credit period allowed by customer is done, and the average stock holding in terms of sales is done. So we have now average credit period allowed by supplier. As I told you before, it is considered to be creditor, and the creditors, it is classified to be current liabilities. So I put it, so less current liabilities, I put creditors, which equal, as is mentioned in the formation, will be equal 4 weeks. So 80,000 divided 52, which is the number of the weeks in 1 year, multiply the 4 weeks will be equal 601,054. Now he give me an additional information. There is allowed 10% for contingencies. So now I will minus the current liabilities from the current assets. So the total of current assets will be equal 30,717, and the current liabilities will be equal 6,154. So 30,717 minus 60,154 will be equal 24,616. And I will add the 10%, so 24,616 added 10% will be equal 2,463. Now 24,616 plus 2,463 will be equal 27,078. So the working capital required will be 27,078.